Dranad Trust here, and there is a new IRS $600 tax rule for 2024. Let's talk about it in this video. So the IRS has delayed the implementation of the 600 reporting threshold for Form 1099-K and will instead use a phased approach. So for the 2024 tax year, third-party settlement organizations, TPSOs, will be required to report payments in settlement of third-party networks, right? In that regard. So third-party network transactions, when the total amount exceeds $5,000, this threshold will decrease to $2,500 in 2025 and will finally to $600 in 2026 and beyond. So the key points is 5,000. The reporting threshold is 5,000 for the calendar year. Penalties: the IRS will not assert penalties under SEC 6651 or SEC 6656 for a TPSO's failure to withhold and pay backup withholding tax during 2024. Affected platforms, payment apps, and online marketplaces like PayPal, Cash App, Venmo, Etsy, and eBay. So this phased implementation is designed to ease the transition for TPSO compliance and participating payee income tax reporting. It's important to note that regardless of whether you receive a 1099-K, you are still required to report all taxable income. Now, hit that subscribe button, hit that like button right now if you are educated and entertained. So the next question is, what are the main concerns about the $600 rule for online sellers? So the main concerns about the $600 rule for online sellers is confusion and complexity, right? The new reporting threshold has caused significant confusion among taxpayers and businesses, leading to multiple delays in implementation. There's the over-reporting of non-taxable transactions. The 600 rule could potentially capture personal transactions like gifts, shared expenses, or reimbursements, which are not meant to be taxable. Burden on casual sellers. Many individuals who occasionally sell personal items online for a loss might receive a 1099-K even if they don't owe taxes on those transactions. Difficulty in distinguishing between personal and business transactions. That's a common one, right? Some payment platforms don't clearly categorize transactions, making it challenging for users to separate taxable business income from non-taxable personal transfers. Also, potential for tax reporting errors, right? The lower threshold increases the likelihood of incorrect reporting, which could lead to taxpayers facing unnecessary audits or tax complications. Now, there's an administrative burden as well, right? The new rule would significantly increase the number of forms 1099-K issued, creating additional work for both taxpayers and the IRS. To address these concerns, the IRS has implemented a phased approach, right? Gradually lowering the threshold over several years to allow for a smoother transition and to provide more time for taxpayers and businesses. So to adapt to the new reporting requirements. Now, what steps can you take to prepare for the eventual $600 threshold? Well, you can do that with these following steps, right? Implement robust record keeping, right? Set up a system to track all income received through third-party payment platforms, separating business transactions from personal ones. Keep detailed records of all income, including small payments that can add up quickly. Also, review payment, right? Review all your payment methods. Consider using business-specific accounts or platforms with built-in tax reporting features to simplify end-of-year tasks and ensure compliance. Monitor reporting platforms. Stay informed about updates from payment apps and online marketplaces regarding their reporting practices. Practice good bookkeeping, right? Save receipts and maintain organized documents of all transactions across payment apps. For business purposes, track costs of goods sold, shipping costs, fees, and expenses for packing and shipping supplies. Ensure accurate TIN information. Provide your correct taxpayer identification number, TIN, to payment platforms to avoid backup withholding issues. Familiarize yourself with deductions. Learn about applicable business deductions to offset potential higher reported income. Stay informed, right? Keep up with IRS updates and potential legislative changes regarding the reporting threshold. Also consider professional help. If you have specific questions or concerns, consult with a CPA or tax professional for personalized guidance. Hit that subscribe button, hit that like button if you are entertained and educated. Hit that subscribe button, hit that like button if you are educated and entertained. Also, let me know your opinions in the comment section below. Appreciate your viewership.